Welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Anchored in family values, Wayne offers practical advice to help you get the most out of your retirement years. For more information, visit today'sretirees.com. Now, here's your host.
And welcome to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Today, we're going to be talking about an exciting topic. You know, we don't talk about this a lot here. You deal with it with your clients. This is part of what you help your clients look at when you're working with folks. But a lot of times we don't think of it as financial planning, and we probably should.
Yeah, absolutely. And I probably don't talk about it enough on the show. But the Ohio Department of Insurance sent out a notice in January. I guess January is Insurance Awareness Month or something in Ohio.
Okay.
But there are some good topics on that notice, and I thought it would be good for our viewers and listeners to, not talk about money, taxes, economy, right? There's enough of that going on the last year. It's looking good, by the way, lately. But we should touch on this insurance topic, and there's some very important things here that people need to stay up on. And
Sure.
It's easy to get complacent and overlook the coverages people have on the various types of insurance that they have or should have.
Sure. Well, as we go through our life, most of us get very complacent. We have an agent, or we have an insurance person we've dealt with, or a relative, whoever it is.
Yeah.
And you talk to folks, and I'm sure you have. Well, I've had, Jane for 20 years.
Yeah.
And we don't really go back and look unless we change vehicles or something like that.
Or have a claim.
Exactly. And this is a topic, when it's not a real exciting topic to look about unless you have a claim.
Right. And then you sometimes find out the hard way that your policy wasn't updated.
Right.
And doesn't pay what you thought it should pay.
Sure. I know a few years ago, there was an auto accident in my family, and then you start looking at, is it going to pay this? Is it going to pay that? And you start realizing, wait a minute, we really should look at this a little differently.
Yes, especially moving forward. But, I recently went through that too, which we'll get into. We'll talk about homeowners first, but when we get to auto owners, there's a few things that people need to be aware of nowadays with auto insurance coverage.
Sure. Well, as a rule of thumb, how often should we really look at our policies? I mean, is this an annual thing we should look at?
I would suggest annually. Absolutely.
Okay.
At least a phone review with your agent. In person's better.
Mm-hmm.
And things go on, like with your home. I mean, you could have a new kitchen. A new kitchen can cost $50,000 or more.
Oh, sure.
I have some clients that put kitchens in, they're $100,000.
Mm-hmm.
And if the homeowner's coverage isn't increased to cover the improvement you did, I mean, if you didn't call your agent, how are they going to know that you just increased the value of your home?
Sure.
And values of homes are going up.
Right.
So it's definitely important to not only look at values for their homeowners, but the liability coverages too.
Mm-hmm.
If something happens on your property or to someone or whatever, there's a lot of lawyers out there that are going to go for top buck.
Sure. Which, everybody's doing these online ordering and things now. When you have, delivery drivers coming in and out of your driveway various times a month, daily sometimes.
Yeah, daily, twice a day, different companies.
Yes. I mean, that liability could become an issue.
Yeah, multiple delivery drivers, furniture delivery, propane delivery, wood, firewood delivery. If your dog rips one of their hands off, you're going to feel some pain with their lawyer coming after you.
Right. Or they slip and fall on your porch or whatever.
Yeah. And if you have a doorbell camera, like a Ring camera, you'll have your own proof there too.
Right. Well, which leads me to I know a fella who does service work, and he fell off a person's stairs off of the porch and ripped up both of his knees, and he was laid up for months. And, we won't go into all the horrors that took place between employer, insurance company, attorneys, but it got very complicated very quickly.
Yeah, and if you have people work on your house, what if you have a worker fall off your roof? There's things you can do. There's coverage you can have. There's indemnity forms you could have contractors sign. So, to not hold you liable if they get hurt on your. There's all kinds of stuff that your property and casualty agent, should, be going over, or questions you should be asking them to make sure you're covered in, 2023's day and age and valuations.
Right. Now, speaking of homeowners insurance, there is a clause in some insurance coverages for replacement coverage. If your house burns down and it's 1,500 square feet, they have a number that 1,000 square feet or per square foot it's $100 or $500, whatever that number is. Is that something that a homeowner should look at, or a person should look at, versus just the value?
Absolutely. I mean, because what $1,500 square foot price are they using? The one when you got the coverage 10 years ago, or what the cost would be today to replace the damage?
Sure.
If your house burned down today, it's going to cost at least 30% more than it did 10 years ago. Heck, 30% more than it did 3 years ago.
Sure.
So, make sure your policy is up to date and will cover today's replacement costs.
So when you're reviewing this, these are some of the questions you should be asking your agent. Now, is now also a good time to compare agent A with agent B, or policy A with, when I say policy, maybe company with company?
I'm the wrong person to ask there.
Okay.
So, yeah, because I've been with State Farm for 30 years.
Okay.
I'm sure I'm paying too much, but when I've had claims, they were always nice to deal with, and, the agent's a friend, and, I'm just not one to shop crazy. If I have good service with good people, until they prove me wrong, I'm just going to stick with them.
Sure. Okay.
But you, on the other hand, you may shop around a little more than me. Rich likes to find a good deal when he can.
I do, but I will admit, I've been with my insurance agent and that particular company since 2001.
Nice.
So
yeah. So we're on the same page.
We are.
There are things you want to shop for and make sure you get good value for the money you're paying. But when you're happy, why risk it?
Well, when we come back, we are going to talk a little bit more about insurance and what you should be looking for, and when you sit down with your agent, what you should be reviewing. Now, these are some of the things that Wayne goes over with you during your helping you put together a financial plan. He doesn't just look at investments and things, that's part of it, but a financial plan takes into effect all of your different parts of your lifestyle and your family's lifestyle. So make the time to go to his website, todaysretirees.com, todaysretirees.com. We'll be back right after this.
I'm not sure if you're aware yet, or if you've listened to my radio show or television show, but we offer a great tax preparation service here at Great Lakes Benefits and Wealth Management. We do CPA prepared tax returns. Whether it's a simple return or you have a more complicated return with a Schedule C or E or F, $90 is all you pay when you're a client of Great Lakes Benefits and Wealth Management. I pay the difference. Very affordable tax preparation service from a very sharp and wise and proactive tax planning CPA. You also get your certified financial planner and your CPA communicating with each other. So many times that doesn't happen. They don't communicate, they don't know what the other one's doing, and you end up paying at tax time in April more than you should. It's very important to stay on top of your taxes, know where you stand before the year ends, not wait and get a surprise when you file your taxes. Take advantage of our service, $90 CPA prepared tax returns. You meet with me first, I learn about your tax situation. I gather your tax documents, organize them, get them to the CPA's office. They prepare the return, and then I deliver it to you. It's a deal. Call the office, 866-626-3990. Be happy to help you out.
And welcome back to today's Retirees with Certified Financial Planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. We're talking a little bit different today, but it's all part of our financial plan that Wayne helps you put together. And we're talking about insurance. I know it's not a topic that we like to talk about. However, if you ever have a claim, you want to make sure of some things that your coverages are correct. And as you were saying in our first segment, January, it's a good time to make an appointment, go in and talk to your agent, look at some coverages. So can we go through some of these?
Sure. And one thing I don't have on the list here, we talked on homeowners in the first segment. Mm-hmm. We'll move on to auto insurance here in a minute, but a couple things to note with homeowners. One, if people have valuables, over and above the normal stuff. Mm-hmm. A lot of folks collect stuff.
Sure.
Coins, stamps, gold, silver, antiques. Mm-hmm. Some women have a lot of jewelry. Some men will have fancy watches. You want to make sure those are covered also.
Okay. Now, are those separate policies, or is that included in your
So either they'll up the coverage on their current, or they'll have a rider policy depending on the item.
Okay.
But you want to make sure you cover that. And, you could have something that you didn't have 10 years ago when you got the policy. You
mm-hmm.
take up a hobby or collection or whatever.
Sure.
Sometimes insurance companies want those inventoried, mm-hmm. With the value and videoed or pictures and all that.
Sure.
Another thing a lot of people overlook is an umbrella liability policy.
Okay.
So we talked about getting sued, if someone gets hurt on your property. They're going to sue typically for lots of money, and many people just have minimums on their homeowners coverage, and an umbrella policy kicks in, once you get sued or mm-hmm. you're going to be liable for something over your normal homeowners liability.
Sure.
That also, the umbrella policy covers your auto too, if you hurt someone over your automobile limits.
Okay.
An umbrella is normally a third policy. It's fairly cheap. You get it from your property and casualty agent. $300 a year per million, give or take, and it just gives you an added layer of protection if something weird happens in your family or bad happens.
Mm-hmm.
You don't have to worry about your other assets being attached or
sure
be liable for the amount over your normal homeowners and auto owners liability coverage.
And each family would have to determine whether what that umbrella would be, $1 million, $10 million, something.
Yeah, I think they normally go in $1 million increments.
Mm-hmm.
And I think if you want an umbrella, most insurance companies, you're going to have your homeowners and auto owners with the same insurance company.
Okay.
And then they have you raise your limits, your homeowners limit to $500,000, your auto owners to $500,000.
I see.
And then you have your $1 million or more umbrella.
Okay.
And again, sit with your agent. Share with them your situation, your concerns. Just make sure your homeowner's coverage in all the areas we discussed are updated.
Okay. Well, and that's just good advice. That's one of the things that Wayne helps. When you sit down with Wayne, he goes through your whole family financial picture. So you don't make some of these, have
oversights. A lot of it's oversights. It's really not even mistakes or mm-hmm. misjudgments. It's just, you get so busy, you just overlook this stuff.
Mm-hmm. And it's easy to do.
Yeah, easy to do.
So let's talk a little bit about auto insurance. Most, you could buy a new car today, they're $75,000 to $100,000.
The nicer ones, yeah. It's crazy. But, there's ways to save on insurance too, raising your deductibles. Mm-hmm. If you've got plenty of money in the bank and you're a good driver, instead of a $250 or $500, you could have $1,000 or higher deductible.
Sure.
So if you get in an accident, the first $1,000's on you, and that may save you some money annually. Mm-hmm. So my son, I don't even know if I told you this, but day before Christmas, he totaled his car right on Route 4.
Oh, my. I don't think I knew that.
Yeah, he slid in. A storm was that weekend, and he slid into the back of a semi. Semi was stopped on Route 4, and he was obviously not paying attention good enough or allowing enough distance. But, yeah, he slammed into the back corner.
Wow.
Took the whole side of his car off, his car door, everything.
Ooh.
Yeah, and he was fine. No issues. All the airbags went out, and he had a seatbelt on, so 0 injuries, which was nice. But his coverage, he didn't have car rental. So, when you're a 20-some-year-old person, or even an adult, and you're without a car for weeks and months,
Sure.
Car rentals and cars, to rent a car isn't as cheap as it used to be.
Yeah.
So, so that could be bad for someone if you don't have car rental insurance. He does now, but luckily, we have extra vehicles, so he was able to take one of our vehicles and take it back to where he was visiting for Christmas. He's able to take it back to home and use it until he got his new replacement car. So car rental is a big oversight.
Sure. So all of these things are parts of what you should be looking at. As we age, some drive less, but some, if they're traveling, they might drive more.
Right.
And they might go buy them a big camper or something like that. So they have to look at all of these.
Yeah, if you're driving less mileage, I mean, you might, if you're putting 5,000 miles a year on, you may be able to get a cheaper premium than someone driving 20,000 miles a year. So it's just, again, just like you keep in touch with your financial planner regularly, at least annually, you should keep in touch with your property and casualty agent just to make sure your coverages are there and you cover things that you maybe didn't need 5 or 10 years ago, or things that had changed or pricing has gone up over the last 5 or 10 years. Just stay on it. Stay current and take the time, grin and bear it, make the call, meet with the agent, and then you're good.
Sure. These things are all the things that Wayne helps you do when you go in and sit down with Wayne. When he says financial planner, this is part of the plan. Putting together the stuff that makes sense for your family, for my family. Your family is going to be different. Your kid's family is going to be different than you. And he'll help you put all of that together so it makes sense for what you are trying to accomplish. And he will help you put the whole plan together. 866-626-3990. You can go to his website, todaysretirees.com, and we'll be back right after this.
Hi, my name's Wayne Maslyk. I'm a certified financial planner and owner and president of Great Lakes Benefits and Wealth Management. I'm making this video because I'd like to offer you, at no charge, a free newsletter that I send to all of my clients and prospects monthly. The newsletter is filled with little tidbits on investing and finances, and we have recipes. But most importantly, I write a personal message in there monthly, whether it's purchasing vehicles, whether it's investing your money, passing assets to your children, trying to lower your taxes, you name it. If it has to do with financial planning, it will be in a newsletter at some point. I keep the information light, though. It's not political. We're not talking economics, nothing like that. It's fun stuff, a little bit about my family monthly, client examples of how we can help people. We won't bug you. All you're going to do is get our monthly newsletter. We keep your information safe. We don't sell it. We don't give it to any other marketer. The sole purpose is to get the word out that I am the go-to source in this area for financial planning.
And welcome back to Today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Today's program, we're talking about insurance. We've talked about homeowners insurance and auto insurance and some of the things that you should be doing. One of the big things, as Wayne is telling us about, is just have a checkup with your agent. Go in and sit down with them and make sure that things are as they're supposed to be. If you've had life changes, remodel, retired and bought that camper that you're going to be taking around the country. Those are all big things that you need to really be concerned about.
Yeah, and even if your life is just pretty much the same as it was, just make sure the value coverage is going to cover what it's going to take in today's dollar to replace a loss.
Sure. Well, speaking of insurance, health insurance is another biggie. Most folks in their working lifetime, they are covered by an employer plan or their own plan if they were self-employed. But after they retire and they get a certain age, of course, everybody's forced into Medicare of some sort.
Once they're 65.
Once they're 65. But something that jumped in, should we have a supplement beyond that? I mean, when I say supplement, you buy supplement when you get into 65 and, or Advantage plans and all those kinds of things. But should you have like for lack of a better term, an umbrella above that?
I don't know if there is one.
Okay.
Really. I mean, you can, the Medicare supplements have different levels of coverage. So you can buy the Cadillac plan, or you can buy a basic plan, or you can go on to the HMO type plan with Medicare. And, the coverage is different for each level, and the premiums vary. So that's something that you need to review with your health insurance agent, not your property casualty agent, but your health insurance agent or your MedSup agent. That needs to be done annually, But you do, if possible, I would take the time to go over the plans before open enrollment, because these agents are just slammed with people. I mean, they don't have time for anything. I mean, they're stacked, their appointments are stacked on top every single day during that period. So you may not get as much research from them. You may not get a fresh, sharp insurance agent during that period.
Sure.
So just like an accountant, when we talk in the past shows, is you want to get with your accountant throughout the year, not just at tax time. It's the same with your health insurance agent. Talk with them, meet with them off season when they have time, when you could explore options. So when open enrollment comes, you know what you're going for that year, and you gotta look at should you raise your deductibles? Should you go if you're not on Medicare, should you go on before age 65? Should you go to an HSA, tax advantage type plan with the savings account, or if you're on an HSA, are you getting benefit from that? Should you be on the PPO? And you have to look at the doctors. Are they covered on the plan? The hospitals, the specialists, and they come on and off these things. I just got a notice with our prescriptions. Normally go to Kroger. Well, Medical Mutual sent me a notice saying no more Kroger. So we have to go to, Walmart or Sam's or CVS or one of the others, and that was just recent. So you have to keep up with not only your homeowners, not only your auto owners, but also your health insurance. Yearly.
Right.
It's not one and done anymore like it used to be. You really got to stay on this stuff. So you get the best coverage for the best value price-wise.
Now, how about nursing or long-term care insurance?
Well, that's a different show.
That's a whole other show.
But yeah, that too. I mean, that if you do get into a long-term care plan, you're typically not going to shop that.
Okay.
Because the older you get, the more price goes up and the more health issues you have over time. So once you have that in place, you're pretty much done. You better hope you pick the right company.
Okay. But that's a different...
That's not what we're talking about today, though.
Well, it just jumped in my head.
Yeah, no, it makes sense. Absolutely.
So as we're evaluating, we get to a certain age. You work with retirees and near retirees mainly. Life insurance, is it too late when you get 65 or 60 years old, or if you've had a policy that was you bought when you were 30, where does this all play in?
So with the life insurance, the basics, make sure the beneficiaries are updated. Make sure they're current. If you had a death in the family or your kids aren't on there, or you want to take your kids off, put your grandkids on.
Or a divorce in the family or
Or
something.
divorce, or,
Right.
you have your ex-wife on there that you never changed, and, you want to keep, of course, the beneficiaries updated. You want to keep the death benefit updated. If you were in a $100,000 house and you now bought a $300,000 or $400,000 house and you're on the hook for larger mortgage, do you have to increase your life insurance benefits? Maybe you're debt-free now and you're later in life and you have this policy you've been paying on and you don't need it anymore. Maybe it's $250,000 and you want to lower it to $100,000, or maybe you want to get rid of it altogether because it's not necessary. So life insurance, again, that is something you should review annually along with all of your other insurances, along with your tax planning, your financial planning, your estate planning. All this stuff is important in life if you have any type of assets. If you're dirt poor, it doesn't matter. If you have a couple dollars, you should need to stay on this stuff.
Sure.
Because it can, an oversight or overlooking something or a mistake, or if you left something out, can really affect your family if something weird happens. Sometimes it's boring. You don't want to get around to it. But that's why we do this show, just to, so people are reminded that there are things you should be doing in your financial life, whether you like it or not, and you just need to make the time and effort to get them done.
And that, I think, is the crucial thing. They need to sit down, take the time, make that phone call, go to your website, and come in and sit down, and especially if they've never done it, and say, look, here's where I am. How do I get to where I want to go?
Yes. And, in our meetings, the first meeting tells me kind of where they're at, kind of a snapshot. And then future meetings after that is exactly what you said. Where do they want to go from here? Timeline, the whole bit. And do we have enough money to accomplish it? If not, what do we need to do to get there?
Sure. So friends, this is the great time to do that. It's the beginning of a new year. Take the time to go to Wayne's website, todaysretirees.com. There's a lot of information there. You can look at old shows that we've done, or previous shows, I should say, that we've done. You can also make an appointment, and we would encourage you to do that, to go in and see Wayne. Especially this time of year, it's new, everything's sort of fresh in our mind, and you can do that at 866-626-3990. We'll see you the next time.
Thanks for tuning in to Today's Retirees with certified financial planner Wayne Maslyk of Great Lakes Benefits and Wealth Management. Visit todaysretirees.com or call 866-626-3990 to schedule a no-cost appointment with Wayne. Today's Retirees is brought to you by Great Lakes Benefits and Wealth Management, family-focused retirement and tax planning services, anchored in family values. Information and opinions discussed on Today's Retirees do not necessarily reflect the opinions of this station. Opinions expressed should not be substituted for individualized consultation with a qualified financial advisor. For specific information, call 866-626-3990 or visit todaysretirees.com.